8:59 a.m. Pacific Standard Time. Excuse me. The 4/3 of 2016 is where the Dow was in bear market territory, and we went straight down like we said that was going to happen. We told everyone it would happen, and it did happen. Now, the bull came back very strong, and the bear and the bull fight is where we put in these double bottoms. What I am saying to everybody is back over here at the highs in 2015 are back in December, yeah, 15th, and this is where we finally had that big correction and the bull came back up. But this particular move down on the down is more serious than other years. Basically, we're going to have a major correction on the Dow Jones again, and that volatility will return to the market. And we've had extremely low volatility in this bull move. The problem for the bull is that they're going to have to deal with the declining earnings season. And that will also be a different live video as far as the earnings season that's starting right now in April. And as of Monday, we're going to have the first week of earnings season. We are extremely overbought. The blue line is a 10-day moving average that started to walk right up. The red line is a 20-day simple moving average. And of course, this green line is a 200-day moving average. Now, mathematically, the bull has extreme volatility. That means that when this correction starts, as it will, and it will go down more than what we've seen right here with the double bottoms on a daily chart. What I will show you is the following. I have pulled up a weekly chart on the Dow Jones. This is the big down correction, and for the first time ever, and what I mean by that, the first time in a very long time, is that 200-week simple moving average. We got below it, and we did. I'm going to draw a trend line right here on this weekly chart, and there are some key factors. Um, One of them I'm going to show you is that we were in a weekly sell signal starting January 2016. Now, having said that, we have popped back up to a buy signal on the weekly chart. And that buy signal that people have not seen forever, and everyone was very bearish, meaning that a lot of people do not even believe where these moves in the S&P have gone parabolically up. But why is it that a lot of people don't um, believe in it? It's very simple to tell you that if I go all the way back over here on the Dow, and we're going to do I'm going back to 2006, 2007 over here, and I'm going to tell everyone the reason why I'm showing this, because here's the thing. When we were putting the bottoms back over here in March of 2009, that's exactly where the rally started. Now, the problem is for the bull is we're going to have a declining earnings season. That means that this whole move in the Dow from 2009 has come straight up over the last 72 months plus, as far as a yearly. This long-term diagonal line that I just put up there is a weekly, and it goes straight up. Basically, what's going to happen when high-frequency trading algorithmic programs, supercomputers, are doing the move, we've got the major wall of resistance. We are going to take a look at, not in this particular update, but we will update this week as to where the bull ETFs are and exactly where the bear um, ETFs are. Now, Here's a trend line on a weekly right here. We're hitting that wall of resistance with the buy signal. One of the things I'm going to be very choosy about saying is that basically there's a problem. 17,277 is the 50-week moving average. Let me pull it up. There we go. Zoom to it. Now, take a look at these weekly moving averages. You have the white line is a 50-week. You have this beige line is a 100-week. And they have finally came into play. So we are above some important key resistance levels that we took out right here. And if you take a look back over here in 2015, you draw a weekly trend line on the top of that bar. This was a weekly sell off in January, and we were in bear market calculations. And that once again, um, the turn is coming soon. So this whole topping pattern over here on a weekly level in the Dow Jones and other major indexes all look about the same. So we have not seen year to date. One of the things I'm going to do is I'm going to pull this one piece of the chart up, and it's going to be right over here in the calendar of 2014. And basically, when we had that correction, I'm going to draw a trend line. It's right there. There it is. There are the tops. This is calendar 2015. And every time that we had a weekly sell down, we popped. I'm going to pull over these trend lines so that people can see on the Dow of 215, 216 is going to be a bigger reversal than this January reversal. And we have to go back to 1933 and the 2009 levels. And here's what's going to happen. 1 year ago in 2015, before 2015 started, follow our long-term predictions and analysis through 2015 and 2016. And that we're in what we call a long-term super bubble. Nobody can deny this analysis, and you can't. And so we wanted to share that with you. We also wanted to share with you how high frequency trading algorithmic programs work with super machines. And you can learn about that by clicking Learn More. Another major thing that you need to learn is ultra high frequency trading platform. Learn why 85% of the retail investors and traders are unable to keep up with high volume, the high volume algorithmic trading. Now, that's going to be a different subject. I want you to see what we did over a year ago and where we're at right now. This was done before the fact. And if I were you, I would stay right tune right in and you better stay there. Because if you don't, well, too bad for you. So we're going to take a look at where the bear ETFs, we could take a look at, we had a 1, 2, here's a 4-week move. The 20-week is the red line. And then they came back and they did another 4 weeks. So we got 8 weeks off of the bottom. And the selling, though, was much greater than any of these weekly up bars. So both the bull and the bear is going to come back. The bull has ran. And guess what? The volatility is here to stay. And volatility will come back. And this next reversal is going to be greater value than this reversal. So volatility is here to stay. I would stay tuned in if I were you. We are going to go back into a bear cycle. This was a bear cycle, 20%, 30% in some equities. All went down extremely hard, and now they've come back with the major earnings season. starting on Monday of April, and that will be 4/4, April 2016. Earnings start, earnings contraction. I said there was going to be an earnings contraction and that the earnings are not going to hold up in this particular stage of going into Q2, and stay tuned.